Hi, this is Dynamic FX. How are we doing? I hope we're having profitable trades. How's our week been? I really want to appreciate those of you who have subscribed to this channel. For those of you who have not, please don't forget to hit the subscribe button. Also, don't forget to hit this notification bell so I get notified every time I post a new video. It's been a wonderful week. As usual, I just want to do a short video on my expectation on gold. Okay. Basically, what I'm looking at is the fact that we've seen the positions of key players in the market seem to have reached a peak or some sort of extreme, like I like to put it. For those of you who don't understand, I may not understand what I'm talking about. My strategy is basically centered around looking at what the institution does. If this is your first time in this video, good enough, I have been able to put out a video on introduction to COT analysis. If you don't know what COT is just a commitment of traders report that is published by the Commodities Futures Trading Commission. All right. So if you want to pause this video and just take a look at that video first so that you can follow along easily when I post a new video. Okay, I'll be doing more videos like that to give you an idea. So basically what we're looking at is I just call the strategy following the smart money. So we just look at what the big guys are doing and follow that. So what we could see from last week, we've seen a drop. Let me take it back. I usually like looking at the snapshot of index for previous week. So let me bring this up. Okay, I'm sorry, let me take that out. Back here. All right, so I just want to show you or what I'm looking at. Okay. So this is gold. What we have here for gold, and okay, good. So what we have for gold, we've seen a drop. We're looking at the report for 4th of February 2020. Like I said, which is on a Tuesday. So what we're now seeing at the index for the commercials. This is their current positioning. Looking at the index, as of last week, we had the index for these guys around 100%, showing an extreme level. So what we've seen is a 9% drop in their net long position, showing that there are some signs of is a bearish outlook for them for gold, and that is not that is to be expected, I think, logically. However, I also want you to see what is going on in the retail space. You can see that they are somewhere around 52%, which was representing a 4% increase in their net long position. All right. So while the hedge funds are dropping their net long positions on gold, the retail traders seem to be gearing up for a bullish move. And guess who's going to win that battle? All right. Well, it depends how the market plays out. Not all those things are not always set in stone, but the expectation will just be that this presents an opportunity for the big pockets to be able to move price against the retail traders. All right. So just a snapshot. Then we'll go to the chart. So please still don't forget you can follow me on TradingView. I have a Twitter handle also, so that if you can get updates. I also have a Telegram group where I share post most of my ideas. It's a free group. Well, I feel the market is large enough. All right. So this is what we're looking at. If you can see in terms of the index, looking at it from a graphical perspective. All right, you can see I said this was going to happen last week, and that's exactly what happened. Last week, what we saw was the the index was somewhere around here. Let me maximize that again. All right, the index was somewhere here. Yes, as of the last report on 28, you can see that they were at 100%, while the retail traders were at 43%. They were bearish. All right, but now you can see what is at play here. So it's more likely all the setups, the technicals, is more likely. There are other factors I would consider. You can, looking at the absolute value, looking at the order flow, you can see that the longs are dropping for the non-commercials, which are the hedge fund, while the retail traders are sustaining the course. We're expecting a bullish move on gold. But you can also see the average commercial to open interest index is dropping fast. Okay, as last week we were somewhere around 82%, but that has dropped to 66%. All right, that is really gearing up for a big move. You can always visit our site at www.tradevasty.com, so you can backtest some of these things that we're showing you. Something else I wanted to quickly drop in there in terms of the outlook for the sentiment. Okay, we could look at. Let's look at the order flow in terms of the absolute value. Let's see if we could get some insights into how their orders are flowing. So we can see here, let's see if we can do two and bring this up here. Let's see, I don't know if this is large enough. Okay, fine. So what we can see that from December 31st, all right, from December 31st, looking at the longs for the non-commercials, they started from 381,000 contracts that was on the long side. Now we're at 355,000. All right, 355,000. I feel that is a huge drop. They are closing out their short position. What do we have? Their long position. What do we have for the short side? The sell side, you can see that from 53,000, that has gradually sneaked up and increased up to about 56,000. So you can see why I'm arguing that there's a possibility that the price of gold will fall. Okay, and I also feel that it's also overdue for some sort of correction since we've had that bull run for quite a while. If we're also looking at the non-portables, the retail traders, okay, let me see if I could get that increased a little. Okay, that's from here. See, nope. Okay, fine. I just hope you can see this. Come on. All right. Let's see. Let's see this. I'm still gonna enlarge this. All right. So what we have here, we can see that from the 31st of December to we had contracts of 61,000. Now that is still on the bullish side, though it has dropped to about 60,000. Okay, that it has dropped to about 60,000, but we still have more bullish contracts there. But fine. Looking at what has happened on the short side, you can see we're from 22,000, 26, increasing to 31, 30 just might drop to about 28%, 28,000 contracts. So invariably, this still also supports the possibility. Okay, so we have the hedge fund dropping their longs and increasing their short position. Okay, we have maybe the retail traders a bit, some of them still holding on to the long position, and so okay, so that is it. So we look at the charts. Once we are at the charts, you could clearly see for a while now we've been trading within this. We've been trading within the range, this weekly range, somewhere around. We've been trading within this range here, the weekly range. All right, we've been within this range here, this range here. That's what we've been doing. So possibly in terms of price action, of course, we could maybe see price push up higher there. There's maybe the pressure coming in from the retail traders before maybe we get a push down when the hedge funds may most likely come in. All right. But it's quite unlikely that maybe we get a push up to the monthly highs, but that's still the possibility. Before, so my buyers, personally, in my opinion, they are giving all the positioning for the smart money is on the short side. So, but that's just my own opinion. A lot of things could change. Good money management. So that is my view on gold. If you have any question, please feel free. You can leave me a comment on the comment section. You can also send me an email at info@tradeversity.com. Thank you for watching. Thank you for this. Don't forget to also give us a thumbs up if you like the video. If you still don't like the video, still give us a thumbs up. We'll appreciate that. Until my next video, yes, also hit the subscribe button. Thank you.